Everyone, welcome to Peaceful Investor. On this channel, I don't give any stock tips. I don't tell you what to buy and what to sell, and I definitely don't give any financial advice. This content is only for educational purpose only and only to make you a better investor. I'm teaching here how to fish rather than catching a fish for you. I explain the businesses in a way which is easy to understand. I explain how a particular business makes money, how their financials look like, and how this company might be in the future, and whether the current price is a fair price to pay for that particular business. I also post quick shorts to keep you in the loop what's happening in the stock market, economic news, and major market moves. On average, I post 6 to 7 videos, and honestly, that takes a lot of time and effort. But I do it because I truly believe in this community where we can learn from each other and grow together. So every single like, comment, and subscription means a lot to me. This isn't a small term thing. I'm building this community for next 5, 10, or maybe for 15 years. And I love for you to be part of it. If you like my content, do consider subscribing. Today I want to talk about a company called Figma, which went public recently and getting a lot of attention from the investors. So what is Figma? Figma is basically a design and collaboration platform. Think of it like Google Docs, but for design. Instead of typing documents together, teams use Figma to design apps, websites, and digital products, all at the same time in the same file. The company was founded in 2012 by Dylan Field and Yvonne Wallace. Their big idea was simple: move design to the cloud and make it collaborative and accessible from anywhere. Over time, Figma became one of the most popular design tools in the world, competing with Adobe, Sketch, and Canva. Figma IPO'd on the New York Stock Exchange in July 2025 under the ticker symbol FIG. It was one of the most anticipated IPOs in the tech sector, especially after Adobe tried to acquire Figma in 2022 for $20 billion. But the deal was later blocked. Today, Figma is used by almost every big name you can think of. Companies like Google, Microsoft, Uber, Airbnb, and Netflix. It's not just designers who use it. Developers, marketers, and product managers all collaborative on Figma. That's why it's growing so fast. It's not just a tool, it's becoming a platform for building digital products from start to finish. So, in simple words, if Canva is for making social media posts and marketing designs, Figma is for building the apps and websites that people actually use. This makes Figma very powerful, especially as more of the world moves digital. Its IPO gave investors a chance to be part of that story. Now let's look at their financial performance. They just posted their Q2 fiscal year 2025 earnings yesterday. And by the way, that's their first quarterly earnings after went public. In the second quarter of 2025, Figma reported 249.6 million in revenue, which is up 41% from last year. That's really a good growth from a company that just went public. On the profit side, they posted a small operating income of 2.1 million on a GAAP basis and 11.5 million if you look at non-GAAP numbers. Net income was 28.2 million GAAP or about 19.8% non-GAAP. The big story here is cash flow. The Figma generated 62.5 million in operating cash flow, which is about 25% of revenue, and 60.6 million in free cash flow, around 24% margin. That shows the business is scaling efficiently. On the top of that, they have a strong cash position, about 1.6 billion in cash and securities on the balance sheet. When we look closely at Figma's financial results, the picture becomes even clearer. This is the company that's growing fast while also proving it can run a disciplined business. Revenue for the quarter crossed 249 million, which is a huge step up from last year. What stands out is not just the size of that growth, but the fact that it's consistent with their long term trend. It shows that demand for collaborative design is still strong and that Figma is winning in its markets. On profitability, even though the margins are still small on gap basis, the fact that they were able to move into positive territory is a big signal. Many software companies stay unprofitable for years after an IPO. Figma is already showing it can control cost and scale. What's even more impressive is the cash flow profile. They generated over 60 million in free cash flow this quarter alone. That means the company isn't just profitable on paper, it's actually bringing in real cash and it can reinvest in product development, acquisitions, and growth. A free cash flow margin in the mid 20s is outstanding for a company still growing revenue at over 40%. And don't forget the balance sheet with around 1.6 billion in cash and marketable securities. So Figma is in a very comfortable financial position. They don't need to rush back to the market to raise capital, which gives them flexibility to keep investing in AI features, new products, and customer growth. When we dig into Figma's customer base, that's where you really see the strength of this business model. First, the net retention rate is sitting at 129%. What that means is existing customers aren't just sticking around, they are actually expanding their use of Figma. For every $100 those clients spent last year, they are spending $129 this year. This is a sign of real stickiness and deepening engagement. On the top of that, the number of enterprise clients is growing. Figma now has nearly 12,000 customers paying over $10,000 a year and more than 1,100 very large customers that spend more than $100,000 annually. These are not small accounts. These are serious businesses that rely on Figma for their daily product design and development workflows. And here is another detail worth noting. Product adoption across the suite. More than 80% of customers are using at least two products, and about two-thirds are using three or more. That's extremely valuable because the more products a company adopts, the harder it becomes for them to switch to a competitor. It creates what investors call a moat, a protective wall around the business. So, when you put it all together, rising enterprise adoption, customer spending more each year, and multi product usage, you can see why Figma is able to keep its growth rate so high. It's not just about winning new clients, it's about getting more value from the customers they already have. One of the things that makes Figma so exciting is the way they are pushing beyond their original design tool and becoming a full platform. In this quarter alone, they pulled out four completely new products. Figma Make uses AI to help with prototyping so teams can turn rough ideas into working design much faster. Figma Draw adds richer drawing and creative options, giving designers more freedom in how they express ideas. Figma cites less people to take their designs and actually publish them as live websites, closing the gap between design and the finished product. And Figma Buzz is aimed at marketing teams, help them generate campaigns and asset more quickly. On the developer side, Figma also released a new Dev Mode MCP server, which brings context from design systems directly into code generated by large language models. In plain words, this means developers can build faster without losing the design consistency that Figma enforces. And they are not just innovating internally, they also made two strategic acquisitions. Modify, which strengthens Figma's capabilities around motion and animation, areas that are becoming more important in modern digital products, and Payload, a headless CMS and developer framework that makes it easier to integrate design with content and code. Add to their annual Configure Use conference, which helps build community and loyalty. And you can see the bigger picture. Figma isn't just a design app anymore. They are building a complete design to build ecosystem where product managers, designers, developers, and marketers can all work together in one place. Looking ahead, Figma also gave guidance for the next quarter and the full year. And those numbers are telling us a lot about where this business is heading. For the third quarter of 2025, they expect revenue to land between 263 and 265 million. That would be about 33% higher than the same quarter last year. While that's a little bit slower than 41% growth they just reported, it's still very strong for a company at this scale. For the full year 2025, they are forecasting revenue in the range of 1 billion. If they hit that, it means Figma will cross the $1 billion annual revenue mark for the very first time with a healthy 37% growth rate. Crossing the $1 billion milestone is a big psychological marker in the SaaS world. It would put them in the league of serious enterprise software players. On profitability, the company is guiding for 88 to $98 million in non-GAAP operating income for the full year. This shows that management isn't just chasing growth, they are also focusing on keeping the business profitable while scaling. So, in simple words, the outlook says revenue growth is strong, they are about to join the $1 billion club, and they are doing it with positive operating profit. That combination is pretty rare for newly public tech company. Of course, as investors, we also need to look at the risks and the things that could create bump in the road. The first one is lockup release. When a company IPOs, insiders like employees and early investor usually agree not to sell their shares for a period of time. For Figma, a portion of those shares, about 25%, become eligible for sale right after these Q2 results. That means we could see extra selling pressure in the short term as insiders take profit. However, it's worth noting that more than half of the shares, around 54%, are under an extended lockup until 2026. So while some selling may happen now, the majority of shares are still locked away for quite a while. The second thing to watch is stock based compensation. Last thing, this number was huge, but it was mostly related to IPO related releases. In this quarter, it come down to about 3% of revenue, which is much healthier. Still, as shareholders, dilution is something to keep an eye on because issuing stock to the employees means our ownership gets spread thinner over time. And finally, there is a big one, valuation. At today's market cap, Figma is trading at around 26 times forward sales. To put that in context, Adobe trades about 7 times, and even other growth SaaS names like Snowflake and Datadog are in the low teens. So Figma multiple is extremely rich. The market is basically saying we expect Figma to keep growing at 30 to 40% for years to come. That's a high bar. So the risks are clear: short term stock volatility from insider selling, long term dilution from stock based compensation, and very high expectations already built into the stock price. To wrap it up, I think Figma is a really strong business. It has a strong moat. Customer stick around, they spend more, and they adopt multiple products, which makes it harder to leave. The company is still in hyper growth mode and it's already showing it can be profitable. Now, here is where I'm cautious: the valuation. When Figma IPO'd, the stock shot up to around $115 a share. But since then, it's dropped more than 50% from that peak. And after posted Q2 earnings, investors expected even more, so the stock fell again by nearly 20%. Now it's now trading at around $54 a share, and which gives the market cap of about 26 billion. At this price, the company is very expensive. For me, that's still a very steep price to pay. Personally, if I ever wanted to buy, I would prefer Figma closer to a $15 billion market cap, which would mean a share price of around $30. So, in short, amazing business, but too expensive right now. So, I would keep it on my watch list. If the price ever comes down, it could be a very attractive long term investment. So, that's it for today. Hope you like this video. So, I will see you in my next video. Thank you.